Thanks, Ayo. Well, welcome. It's another trading day. I will see the month of February now. The trading day is moving on quite well at this point. We start with the Naira now. We're seeing from a bullish trade for January. We're seeing the Naira kicking off February with bullish sentiment there with NAFEX. That was up 0.13% to close 1,495 Naira 60 kobo to the dollar. We also had the Central Bank of Nigeria extending the temporary access granted to BDC operators for purchasing foreign exchange from the Nigerian foreign exchange market. That's been extended till May 30th, 2025. So BDC still have access to that $25,000 weekly sale. Let's get a check on what's playing out with oil now. Oil prices retreated today after U.S. President Donald Trump agreed to hold off imposing steep tariffs on Mexico and Canada. That's the two biggest foreign oil suppliers to the United States. That's for a month. And we see the oil market already reacting to that $75.55 a barrel. That's 0.5% down for Brent crude. US WTI, $72.41 a barrel, down a big 1%. Both Canadian Prime Minister Justin Trudeau and Mexican President Claudia Sheinbaum said they had agreed to bolster border enforcement efforts in response to Trump's demand to crack down on immigration and drug smuggling. That would pause for 30 days, 25% tariffs with a 10% tariff on energy imports from Canada that were due to take effect. That was supposed to be today. And back here in Nigeria, the Nigerian Upstream Petroleum Regulatory Commission says it will no longer approve export permits for crude oil cargoes meant for domestic refineries. The regulator, who made this known in a statement, insists oil companies must meet their domestic supply obligations before selling crude abroad. The NUPRC chief executive, Mr. Gbenga Komolafe, warns that any changes to cargoes designated for local refining must first be approved. He says both oil producers and refiners must comply with the rules to avoid disruptions in Nigeria's energy supply. Citing the Petroleum Industry Act, Mr. Komolafe says the commission has put strict measures in place to enforce compliance. It warns that crude meant for local refining must not be diverted, and the violations will be met with regulatory action. The Nigerian Communications Commission reports that internet subscribers in the country, that dropped by 24.5 million, about 15%, from 163.83 million in December 2023 to 139.28 million subscribers in December 2024. The mobile sector accounted for the bulk of this drop with 138.77 million subscribers, while fixed wired and VoIP subscribers made up the remainder. The NCC also reported growth in broadband penetration, which increased from 43.16% in November 2024 to 44.43% in December. Also, data usage surged up to 973,000 terabytes, an increase of over 260,000 terabytes from December 2023, with 4G and 5G accounting for significant portions of the data consumption. So we're seeing data consumption actually rising there. All right, so on first conversation now, we see for the commodities market, we have Dumebi Oluwole, she's a senior economist, financial derivatives company, joining me right here in the studio. Great to have you, Dumebi.
Thank you so much, Laddie.
And Happy New Month.
Happy New Month.
It's a month of red. And we've seen that play out in some, markets so far.
Yeah.
Well, right now it's all about the trade wars.
I mean,
yes, it's been, and now we're seeing China, looking to retaliate on the U.S. And I'm wondering how all of this impacts an import-dependent country like Nigeria.
I mean, the first thing to look at is the countries that are engaging in this activity or the trade war in itself, and how those countries have trade relationships with Nigeria, and then what that generically would mean for Nigeria's imports or exports or the general domestic economy in the sense, and especially looking at how all of this interplays with the global commodities market that Nigeria is very vulnerable to. I think the first thing we'll definitely be looking at in terms of the commodities market and would be oil. We've seen how oil prices have moved or danced to the tune of all of this announcements, the trade wars, and the trade exchanges, the tariff impositions and all of that. So if you even start from the beginning of the year where we had the Biden administration, slap on additional sanctions on Russia, we saw oil prices react to that and oil prices increased, because what that meant was there was going to be slower production or slower oil supply. And then you also look at what is happening now with the U.S. actually planning to ramp up production while increasing or imposing tariffs on Canada and Mexico. But then the important thing to see here is where oil prices eventually land at, or where oil prices have been landing, and what that means for Nigeria's budget. We're planning, our 2025 budget is hinged on $75 per barrel, right? We've seen oil prices actually trade at around that, 75, 76, 77. So what that means is that even if oil prices are higher, with oil prices higher now, we should see, government revenue, at least in the short term, we should see government revenue somewhat increase towards this level, at least in tandem with the increase in global oil prices. And if oil prices fall, because of everything that is currently going on, what we should definitely expect over time is that we'll definitely see a negative impact on government revenue. But the other aspect of it is when you now look at the exchange rate situation, where the naira is significantly has significantly depreciated right now, and when you convert the dollar earnings to naira, in naira terms, we also should be earning more. And a very good pointer to this particular dynamic is the fact disbursements that we've seen all through 2024, where with the naira devaluation, the naira revenue, government revenue in naira terms were a lot more higher. And generally, we're seeing the federal government, we're also seeing the central bank actually move towards spending more in naira to reduce dollar demand. So, and if that is the case, we should see some level of stability with the naira.
Right.
But then again, the flip side of it is oil production. So, and that's where I was going to speak a lot more on, simply because we do know that Nigeria is more sensitive to changes in oil production than prices. And with the current dynamics with OPEC and the US, we do know that OPEC is insistent on actually maintaining its easing of the output cuts by April. We don't know what might happen between now and April, but they're in conversations with the US. And if they do stick with easing those output cuts, what we should expect is Nigeria's oil production should pick up. Simply because now the quota should increase. The quota should increase, right? Because we're doing 1.5 now to our quota. We've hit that quota. The government is budgeting, the government budget for 2025 is anchored on 2.06 million barrels per day. And the NUPRC is actually intended on actually making sure that we hit that mark. So what that means is that on the domestic front, there will be an increase in oil production, because we are seeing government efforts towards that. But if OPEC decides to retain its output cuts, we might see some friction there, because Nigeria might not be able to produce as much as it should to generate as much revenue through exports. But then again, we are seeing OPEC planning to stick to its easing of output cuts, and if that happens, it means that there are positive prospects for Nigeria being able to increase in oil production.
Body language of OPEC Plus, yes, and President Donald Trump. Donald Trump wants oil prices down.
Yes.
OPEC would like prices,
keep it they're being conservative,
to be constant. But at the end of the day, what Trump is asking for, that could be good for PMS prices, because we did hear from Dangote Refinery saying that they reduce ex-depot prices. So it all depends on, I guess, lower prices is not totally a bad thing. For Nigeria. It's not.
The thing is, we must make sure that prices don't crash. I don't think the U.S. economy will want prices to crash significantly.
We don't want that. Right.
So I think even if prices reduce, like I mentioned earlier, right, prices could go down to as low as $70 per barrel. But again, like I mentioned, Nigeria is more sensitive to production than price. So if we're able to ramp up production at $70 per barrel, we should still be able to make substantial revenue. And remember, when you convert the dollar earnings to naira, it should make more sense for us to be able to spend some more. So the goal right now should be on, or where our lens should be focused on more, is on oil production, because that's where we will generate more revenue. Global oil price dynamics, definitely, if prices fall, they're definitely beneficial for Nigerians when you look at the trickle-down effect to lower petrol prices, especially if we ensure, and all stakeholders do ensure, that the trickle-down effect is a lot faster, in the sense that we see global oil prices rise. We're also seeing maybe Dangote increasing its prices, NNPC also increasing prices in tandem. When prices fall, that same response should also be as quick. And we're seeing that happen with Dangote. And so the expectation will be that independent oil marketers, including the NNPC, follow suit as well, so that Nigerians do now really understand the reason why the market is deregulated, and understanding that if prices rise globally, prices would also rise domestically, and if prices fall globally, we should also expect prices to fall domestically.
Maybe at some point we'll see a switch there where prices go up slower.
Exactly.
That would be nice
the pace
to
of
see.
increase. So I think that's one of the reasons why some of these market dynamics are in place. So even when prices rise globally, the expectation is that there will be communication to the general public on prices have risen, this is what we expect to happen, and over the course of XYZ days or XYZ weeks, we should see prices increase in tandem. And if there are any changes, so basically the communication to the general public is extremely important. And what this does on a national level is that it helps to increase the trust between the government and the people. And that is one thing that we have seen over time in terms of socioeconomic dynamics has actually significantly declined. The trust deficit between the Nigerian government and people has significantly declined. And one way to bridge that gap is to ensure proper communication to Nigerians, and making sure that people actually see that what you're saying is the truth and it's exactly what's happening.
Right, because we need a lot of confidence, at this point. And, we see Trump also warning BRICS, that bloc against replacing, the US dollar. And we recently, Nigeria joined, BRICS as a partner country, recently. So should we be afraid?
I don't think we should be afraid. I think that these are conversations that we'll constantly see right now. The important thing, again, like I said, is for Nigeria to really know its place with everything that is happening. And what exactly is Nigeria's place? Nigeria's trading partners primarily have been China, have been the Netherlands, have also been the UK. So we're also seeing some regional integration beginning to take place where South Africa is coming up in Nigeria's trading activities. And the goal here is, even if we're trading with the US dollar, and I think I want to say this now in the sense that regardless of whatever currency it is, the goal should be for us to make sure that we're producing enough. Productivity should be the goal. So having conversation, I don't think Nigeria is ripe for these kinds of conversations simply because we're not yet there. We are making our way there by making sure that we ensure that the economies were producing a lot more. We know about the decade of gas that is coming up, trying to ensure that we're participating in the conversations around the transitional fuel, making sure Nigeria is also participating in conversations around renewable energy, making sure Nigeria is having conversations and making sure we're doing things around infrastructure development. But I think that we still have a lot of home cleaning, house cleaning to do. So while this is something to be concerned about or to really check how this would affect Nigeria, I don't think this is something Nigeria should be worried about.
We shouldn't really care about currency.
Not care, but we shouldn't be worried about it. I think we will definitely see how all of this plays out, because the BRICS conversation has been happening since 2023. In fact, since 2022, since the Russia-Ukraine war started. So I think we will just see more things coming up regarding those conversations.
All right. So we're seeing domestic commodity prices falling.
Yeah.
We did speak about that towards the end of January. So I guess the trend is continuing. Yes.
So we're still in the we're still having some of the positive impacts from the harvest season going on. But again, some commodities are in their planting season, so we're still seeing some divergent price dynamics for some commodities. Right. But then again, I think the other thing that we're also noticing is we're seeing consumers beginning to acclimatize a lot more with the domestic market price changes. So again, the thing of sachetization, buying in units, we're seeing that a lot more. And we're also seeing retailers actually adopt that. So for instance, if you go to the market, you will see like 100 naira crayfish in a nylon, things like that, because they're trying to make sure that people are able to at least buy what they are selling. So we're seeing a lot more.
100 naira crayfish won't do much for me, though.
I know, but I mean, it's something. half bread is better than one, I believe. Yeah, I think there's one other thing I wanted to mention about the entire global domestic commodity and how that eventually will play out for Nigeria. One thing to note is with all of this tariff slaps here and there, one of the things that we're likely to see is that global commodity prices will remain high. And the reason why this is the case is because as all of this happens, the chances of the US Fed retaining interest rates at the current levels is very high. What that means is that there will be slower pace of rate cuts. And what that now also means is that the US dollar strength will remain will remain in those markets.
Because when we hear stories about the tariffs and, more tariffs, being slammed, all risk assets, most of them, plummet. Then we see the US dollar strengthening. So we'll see that inverse relationship.
Global commodity prices would remain more expensive. And with Nigeria importing some of these commodities, we'll see that definitely play out in the domestic commodities market.
Since 2025 is going to be very interesting for investors.
Yes, exactly. I mean, at least for the first half of the year. Until things begin to stabilize, because right now there's still uncertainty around the Russia-Ukraine war. There's uncertainty around stabilization with the Trump administration. We're seeing a lot of things changing very quickly,
very fast,
very fast, and we're also seeing retaliative measures. So, but I think in terms of a short-term outlook for how the global economy will be and how Nigeria could somewhat position itself, we do think that the global commodities market we're going to see price increases, and so the government obviously will need to plan for such. We're also going to see protectionist stance from a lot of countries, especially we're going to see a lot of, especially from like emerging markets, right, like China, Russia, India. We might see all of those things come up again, things we saw at the beginning of 2022. So just so that countries will try to focus more on addressing domestic commodity price changes, trying to hedge against what they would expect or anticipate in the global commodities market. So investor expectations, inflation expectations, exchange expectations will really play a huge role in the global commodity and in the global economy for at least the first quarter of the year or the first half of the year before things begin to
hopefully we don't get too protectionist, at this point. Let's look out for each other.
I mean, one love.
Going for one love, at the end of it. Thank you so much. Dumebi, always great to have your perspective.
Thank you. Thank you for having me.